ARK Invest has released their new Bitcoin monthly report, and in this video, I'm going to break everything down for you guys. I'm going to show you the highlights, and I'm going to explain some more of the final points behind what they're trying to explain here in ARK Invest's Bitcoin monthly report. But before we get to that, be sure to subscribe, be sure to hit that like button, and be sure to follow me on X. We just went over about 250 subscribers for the channel. I'm definitely very happy about that, and I would love to see if we can make a push for 300. That would be absolutely amazing. So we're starting off, as usual, the Bitcoin monthly report here. We're going to go through the market summary, all right? And some of the more important parts to point out here are the fact that they're talking about Bitcoin closing below its 200-week moving average, which is an incredibly important metric. Now, we have people like Michael Saylor saying the 200-week moving average is kind of a sign of Bitcoin being undervalued or overvalued. If you buy it above the 200-week moving average, he says that it's not as undervalued. But if you buy it under the 200-week moving average, it would signify that Bitcoin is undervalued. So this is a significant level, and we see here that it closed in August at about 25,900, and they're saying that there's potential downside risk to 20,300 or the market's average cost basis, also known as your realized price. That's something I've talked about quite a few times on the channel. We've talked about the 200-week moving average and why that's so important, and the reason why the market's average cost basis is also really important. This is most likely going to provide a strong support level here at about 20,300. Now, they also talk about a new on-chain metric that they've developed in collaboration with Glassnode as well. We'll talk more about that a little bit later. And the complete and total collapse of open interest in the futures market, which is something I've been pointing towards as being something that has been rather alarming. And they also talk about the significantly important or bullish events for the last month, including Grayscale's win against the SEC and the fact that Bitcoin's activity still remains healthy on the Bitcoin network, okay? And finally, they cover macro uncertainty. So this macro uncertainty that they're talking about in the U.S. is something that they're pointing towards being fairly bearish for Bitcoin. In fact, I would say that the macro uncertainty for this report is pretty extreme. I would say that some of the things that they talk about here tend to indicate that there is a recession coming, or they expect a fairly major recession that is going to be on the horizon. And we're going to go ahead and move on to the on-chain fundamentals. We haven't seen many changes for these. The transaction volume did get bumped up to neutral before it was bearish, but they've seen a nice change in the transaction volume over the last month, so they upgraded this to neutral. That's the only change. There's also not any changes whatsoever to the other metrics or long-term valuation, short-term valuation, or the market sentiment. Those are all mostly those are bullish in ARK's view, except for the market cost basis, which they have put at about 20,300. Now, they're going to go ahead and explain this 200-week moving average from a technical analysis point of view. Very important support, very important resistance as well. The 200-week moving average right now we've seen at about 20,000 or 27,500, and it's actually gone below that level, and it's happened for the first time since June of 2023. That's also something I've pointed out as well. And this historically, that 200-week moving average here, you can see in purple, this is not a level that Bitcoin tends to go under for very long historically. We saw here at about 2019, it barely touched that level. 2020, it actually went below that level. But over the last year, that's kind of where we've seen the most time that Bitcoin has spent below that 200-week moving average, from that drop in June of 2022 up until about probably like March or so of 2023, it was below that level. Now, they also say that Bitcoin should find that very strong support here at 20,300. And I've done multiple analysis on my side that basically say that during this late stage of the Bitcoin cycle, it is incredibly unusual for Bitcoin to actually fall below its realized price. And they're agreeing with me here and saying that that 20,300 level is fairly strong support for Bitcoin. So they say here that this level is going to be basically the next major support level. So they say also, they explain what a realized support, realized market cap is. Basically, it's just the realized cap divided by the total supply, and it measures the average cost basis of all Bitcoin in the market. They also point out here that the GBTC Grayscale Bitcoin Trust discount to the net asset value premium has decreased. So what's happening here is that GBTC is a holding company that owns Bitcoin, and it trades at a discount relative to the Bitcoin spot price. Now, after the SEC lost that court case with Grayscale, the Grayscale Bitcoin Trust price rose and the premium was further reduced. Okay, so that's what we're seeing here right now. Now, it's been speculated that if we do get a spot ETF and they're able to convert their current holdings into a spot ETF, that discount would evaporate, that discount would disappear, and then it would start the actual ETF would follow the price of spot Bitcoin. So they're just pointing out that this right here is actually bullish, especially for Grayscale. If they can get that spot Bitcoin ETF, then that premium would be reduced and the price would be much higher for Grayscale. They also talk about their new OnChain Mean. Okay, they also have referred to this as the active investor price. Okay, or true market mean. It hit 96,600 or 29,600, and this is basically establishing an important resistance level for Bitcoin. They've said that before it rarely has broken above this level in like the past couple of months. And they've developed it collaboratively with ARK Invest and Glassnode. And they also come down here and talk about this other metric as well, the active value to investor value ratio. And this will signify that whenever it equals 1, investors in the secondary market, so basically people who are just buying Bitcoin off of exchanges, are going to be break even. And so currently we can kind of see that right now it is just below that level, just below that 1 level, and that would suggest that these investors that have bought are underwater, which would make sense if you think about it, especially if they're buying above 30,000, around 31,000, probably still underwater. And this is something that they're going to be looking at in the future. This on-chain mean is most likely going to be resistance, 29,600, and the AVIV, the active value to investor value, is going to give you an idea of whether or not investors are in profitability. Now, they also talk about here something that they haven't mentioned before, which is the realized cap drawdown. All right, so this can be thought of as money that is leaving the Bitcoin market. Okay, so what they do is they take a look at the capital outflow from the network. And so Bitcoin had a pretty massive capital outflow back in the June of 2022 crash, and then it kind of peaked out here at about the FTX collapse during November of 2022. And so now we're starting to see it actually kind of start to recover as more capital inflows into the Bitcoin network. And so this is really important because we've seen in the past that this kind of shadows the previous bear markets. We saw here in 2012 or late 2011. We saw here at January of 2015, 2016. Here at January of 2018, 2019. In this area right here, and we also saw a brief drawdown here in 2020 as well. But this one we had in the past couple of years have actually been the largest drawdown so far, and it kind of shows that we're on the other side of this Bitcoin bear market currently, which I do believe we are out of the Bitcoin bear market. Right now, we're sitting more of like a kangaroo type of market in which the market's up and then it's down and it's up and it's down. And usually this happens before we start the next bull market surge. But they're saying here that this is paving the way for a healthier bull market, and I would tend to agree with that. And they are bullish on this recovery. Next, they point out the open interest from the futures. And again, this is something that I've talked about quite a bit, but we've seen an absolutely massive number of liquidations in the Bitcoin futures market, mostly long liquidations of the past, let's say, couple of weeks, in which about like August 14th, 15th, 16th, 17th, massive number of liquidations. And as a result, the open interest, or the number of contracts that are open, has basically decreased enormously. It's decreased enormously. And so what we've seen here is a drawdown that was similar to previous liquidation events like your June of 2020, June of 2022 over here, and then November of 2022 as well. That was a huge drawdown liquidation type event. And so they're seeing this as a sentiment correction. So a lot of these longs got wiped out. And as a result, now they're staying on the sidelines. Traders aren't doing anything. They're waiting for the market to recover or move one direction or the other. And so they're saying this is a sentiment correction, and that is bullish. Next, they talk about the market cap of stablecoins. Okay, this is also something that is incredibly important to track, especially if you're looking at the start of the next bull market. What they're noticing here and what they're pointing out is that a positive percent change in the number of stablecoins tends to correlate with a bull market, and a negative change tends to correlate more with a bear market. Right now, we're seeing that significant number of stablecoins are sitting in accounts not being used, and investors are sitting on the sidelines. Traders are sitting on the sidelines. They're waiting for, again, a move to the upside or move to the downside. They've talked about the fact that the supply of stablecoins has dropped more than 20%, or the market cap of stablecoins has dropped more than 20% from 162 billion in March of 2022 to 120 billion today. And that basically leads to a decrease in liquidity in the market. And net inflows would suggest that bullish momentum is building. Again, that's what I talk about here in the green here, okay? So as soon as you start to see this flip, that is basically when that'd be a good indicator of the next bull market. But for now, they're just noticing the fact that stablecoin market cap has been recovering very, very slowly, but it still remains negative overall. Next, they talk about what's going on in the macro economy. Now, these sections, these slides here, I think are very bearish. And right now, ARK is trying to underline how incredibly bearish the macro picture is right now for the overall economy. So they start with the GDP and GDI, gross domestic product, and the gross domestic income, and how basically these two things should match up on a one-to-one basis, but they're not right now. There's a significant difference in the GDP versus GDI, and so they think that this is going to result in negative revisions to the GDP in the future, because they're not trading to a one-to-one. And so this is one indicator that they're looking at that points towards a recession. The next thing they talk about is the real federal funds policy, and comparing that to what they call the natural rate of interest. Now, the federal funds policy, largely driven by the Fed. The Fed decides at what rate they're going to go ahead and put that at. And it's recently climbed above what they call the natural rate of interest, which is the theoretical rate at which the economy is neither expanding nor contracting. And this tends to suggest that there is a significant disparity in the monetary policy, and this points basically towards a recession. And this is the most restrictive monetary policy since 2009. Okay, that's what they're saying here. Again, it's very bearish on the macro, and they're saying that that restrictive monetary policy is going to basically stop the economy from growing at its normal rate. They also talk about the government and revised employment in the labor market. Okay, so the labor market right now has seen 6 consecutive months of non-farm payroll statistics down. Okay, so what they're saying here is that the jobs numbers really are worse than are being reported, and according to them, 6 consecutive months in the absence of a recession. The last time that happened was in 2007, right before the great financial crisis. So again, very bearish right now on the macroeconomic picture. And they're saying that the conditions right now are similar to 2007, which was before the great financial crisis and before we saw a huge spike in unemployment. And right now we're kind of in a similar state. Okay. Then next, they talk about the consumer and consumer spending. Total consumer spending has reversed course, and discount stores are taking the majority of the consumer spending. We have discount stores here in black, okay? And then we have department stores here in green, and we're starting to see a noticeable divergence here between your discount stores and your department stores, and that seems to indicate that consumers are drifting more towards these discount stores as opposed to the department stores because they just don't have as much money to spend. Okay, that leads me to the end of the Bitcoin monthly report. And it seems like ARK Invest is very bearish in the near term on the macroeconomy, but still bullish on Bitcoin and the network activity. The network activity still remains healthy as a whole, but there are some challenges coming with the macroeconomic picture. So let me know what you guys think. Leave a comment below, and I will catch you guys in the next video.